In this video, we're going to talk about the top 5 trading mistakes that have cost me tens of thousands of pounds, both in Forex and crypto. Hopefully you haven't made these mistakes yourself, but let's just jump straight into it. Number 1, having too many charts on the watch list. Number 2, not having set hours to trade in. Number 3, taking other people's trades. This one, man, honestly. Number 4, trying too many strategies at once. And number 5, lacking discipline. To be honest, the others you can all kind of change tomorrow, but this one takes a little bit more work, so we'll talk about that one at the end. Number 1, having too many charts on the watch list. For a bit of context, I used to trade as a swing trader and I used to trade 16 Forex pairs. I now trade intraday with just one Forex pair and one crypto pair for a higher time frame, which is Bitcoin. I found that by having 15 plus charts on the watch list meant that it overwhelmed my brain. It made my discipline go out the window. It made me look for opportunities constantly. It made me jump into trades that weren't showing because I wasn't able to do the proper analysis on that particular chart as I was staring at something else, and I just reacted to an alert. I found that by looking at multiple charts and having them on your watch list, it puts you into the wrong type of mindset. It puts you into kind of a scarcity mindset where you're always looking to be active in the market. Let's say nothing's happening on GBP pairs, you're then scouring the market on Euro pairs to get active and to actually trade. With that particular type of mindset, it can hold you back. It will make you jumpy, it will make you FOMO, it will make you boredom trade, rather than just accepting that you may not have any opportunities on the day and having to come back the next day. It means that you are suffering analysis paralysis from having way too much information available to you, and it just means it's all consuming. And having all of that noise, whether it's in the background or if you're totally focused in on having, say, 20 pairs on the screen, 10 pairs, whatever the case is, it just means that you're not in the right mindset to give everything to the one particular instrument and one particular opportunity that's going to make you the most money on that day. Or like I said, it could just be that you shouldn't be active on the markets on that day as well, but having all those charts open and available to you means that you want to get involved, and it means that you feel that you have to get involved. Particularly on social media, where you'll see people constantly trading, constantly posting wins, you'll feel like you have to do something to make sure that you're catching up with those people or staying on the same level as them. By dropping down to just one chart, I've found that it puts you way more in sync with it. I've found that you get to understand its behaviors way more. You get to understand when moves are exhausted. You get to understand when trends will continue. You'll get to understand when things are choppy and ranging and when to actually stay out. It becomes a bit like a relationship. You kind of know when you can get some and when you can't.
Yeah, boy.
One of the arguments for dropping down to just one or two charts is that you won't have enough opportunities. Some people may think, and I certainly had this thought myself, that by dropping down to just one or two charts, it will actually make you overtrade because you're missing out on certain opportunities. You'll feel like you're sitting there for 3 or 4 hours not doing anything, and maybe you should actually jump in and get active onto the market. But I found actually it's not the case. You will end up being more disciplined because you know that your edge isn't there, because you know that the market's not going to provide today. So you do end up just sitting out. My profit and loss actually improved once I started moving down to one chart. So maybe that's a move you can make as well. But it cost me loads of money because I was constantly looking for those opportunities, and it was all about your mindset with trading. You'll be able to understand things way more clearly if you're just giving all your focus to one particular chart. Number 2, not having set hours to trade in. This is a really common problem in the crypto market because it's 24/7 and because you have thousands of assets available for you to trade. In the book Trader Mind by Steve Ward, he talks about how humans only have the capacity for 2 major emotional decisions in a day. That could be trading, because one trade equals a very emotional decision. It makes you highly strung, it brings up all of your anxieties, it puts you in a heightened state of emotion. And I found by having more than 2 trades in the day, my performance suffers, my profit and loss suffers, and it just ends up meaning I have a worse day. It fatigues me. Mentally, we're just not capable of sitting there for 12 plus hours a day, trading multiple different charts, multiple different time frames, it becomes too consuming. It's actually detrimental to your life outside of trading. It will affect your relationships, your friendships, your work, your gym routine, whatever the case is. By sitting there at your computer all day, again, like the first point, it puts you into a mindset where you're constantly looking to get active, where you're constantly looking for opportunities, but you just have to accept in this game that you're going to miss them. Like, for example, you have to sleep. Sometimes when you're sleeping, you're missing opportunities. Oh no! Sometimes when you trade one particular instrument, you're going to miss opportunities in other markets. So you have to kind of make peace with the fact that if you only have set hours in the day to trade and you have a cutoff point, there are going to be opportunities that you're going to miss later on in the day where you're not paying attention to the PC. It means that you get to come back tomorrow fresher and perform higher and actually look to make money. When you're able to sit at the PC for hours on end, you'll think that you're being proactive and that you're improving your trading understanding and your skill set. But over time, I've found that the days where I spent more than 5 or 6 hours at the charts, just kind of like a normal job, my profit and loss suffered, my account suffered. So what I decided to do, since I'm in the UK, is trade the London session and pre-New York session only. After the New York session opened, I found that I was just a little bit mentally fatigued. I was a little bit too tired, my decision making got poorer, and I started to read the price action a little bit less diligently than I would earlier on in the day. And if I continued that, I'd just end up battering my account, and nobody wants to do that. So what I did is decided to cut off at the New York session and be done with the day. If I didn't make any trades on the day, that's fine, I can come back tomorrow. I know exactly what hours I'm trading in, but it also meant I could have a little bit of a life, because we don't get into trading to be slaves to the market. We want a little bit of freedom. We want to have a good balance between work and life. So for me, I found that by just jumping to the one session, it structured my days a little bit better and gave me a better routine and a better process for my trading. Number 3, taking other people's trades. I still suffer to this day on this one. You're not going to get anywhere in your trading career if you're taking other people's trades. I understand why you want to do it, but the reason you're doing it is because you lack the self-belief in your own system and your own processes. And the way to improve that is to actually be a bit more disciplined and to work properly to build more reps on your edge. Taking other people's trades feels like a shortcut to making money. If I make just this one trade and I bank a bit of money, then I'll focus on my own stuff. I bet you've said that before, because I have. But the problem with taking other people's trades is that you, first of all, don't know where in their process you're taking that trade. So out of a process of 10 trades, you could be taking a couple of losses out of their 40%, 50% strike rate. And unless you're going to take the other 7 or 8 trades that they're going to post, then you're going to end up down on your account. You don't know if they're actually taking those trades from themselves and from their own setups, or if they've actually copied someone else to post themselves to you, which actually happens quite a lot in the trading world. That's a scam! So you don't know if that person has full confidence in what they're doing, and you don't actually know what their win rate is. But again, it all comes back down to you and your belief in yourself and what you're doing. If you want to take trading seriously, you will not get anywhere by taking other people's trades. If you want to become great at something, you have to make your own way there. You have to be able to go through all the trials and tribulations of working out an edge and the refinement of that edge, rather than taking shortcuts to try and get to that profitable stage. You won't be profitable by doing so. It just ends up as a net negative by taking other people's trades, I've found. Like I said, there's way too many variables to consider in this, and I've just lost tons of money doing it. No matter how much conviction someone has in what they're saying to me, I've always found, probably 9 times out of 10, that they're wrong and I'm gonna lose money. So I try not to do it now, but I do get suckered into crypto trades every now and then from people. So I still continue to lose money on that one, but it's not as much as I'm making, so we're okay on that one. Number 4, trying too many strategies at once. When you're first starting out with trading, you want to try out everything. You want to try and find out what works for you and your personality, what makes sense to you when you open the charts up. And that's different. But once you've actually got an edge, and once you've kind of got a way to extract money from the markets pretty consistently, you'll kind of become a bit cocksure. You'll get a little bit arrogant, and that's just one of the rites of passage, I think, to becoming a consistently profitable trader. You'll get very confident in your own ability that you'll think you'll be able to do absolutely anything in the market. You could have one particular trend continuation pattern that makes you money, But on a day where that trend continuation pattern isn't showing and you've had 2 or 3 wins before you may decide to just switch it up a little bit because you're on fire and you can make some money. But I've always found doing so will end up leading to revenge trading and kind of going on a spiral of death and having a really bad day. But having different strategies could mean different things. It could be different patterns. It could be having one pattern on one instrument and another pattern on another instrument. It could be looking at higher time frame and then dialing down to a lower time frame, or it could be staying on a higher time frame. You know, the list is endless. Personally, I've found that, like in previous points, I've become too overwhelmed by looking for different things each day. If I know exactly what my one pattern is on my one chart in my one set of hours, I can focus purely on that. And if it doesn't appear, it doesn't appear, and I get to come back tomorrow and try again. Rather than having that scarcity mindset of having a lot of different tools in my arsenal to put onto the market. Again, it leads to FOMO trading, it leads to that analysis paralysis, and it leads to not really understanding the context of what you're doing. You could miss your A+ setups because you're focusing on a B grade different strategy that doesn't work out. It really hurts at the end of the day when you see that the one thing you should have done works out, but you've been too busy taking things for the sake of wanting to actually get active in the markets and looking completely the wrong way. By having different strategies that you fall back on, whether that's 2 or 3 different ones, or some people have 5+, it kind of makes you a little bit of a jack of all trades, master of none, to coin a phrase. I've found that by focusing purely on one strategy and getting many reps on that, way more reps than you think you need, because a lot of people will take a strategy, back test it for 50 reps and then go, okay, this works, and let's just jump onto the next one. And then I've got different things that I can fall back on. I've found that actually you probably need more like 1,000 reps to truly master a particular part of your edge. It may even be more than that, but a good base level for mastering something, a particular strategy, should be around about 1,000 reps. Once you've done that, then you can perhaps look at different strategies to implement. But I really think the way to profitability and consistency is focusing on one strategy. I've spent way too much time in my career focusing on the technicals and looking at different strategies when one doesn't work out on the day that I lost faith in. So I must try the opposite because I was wrong on the first one, so I must be right on the second one. This ends up being a complete clusterfuck for your mind. It just puts way too much in your brain, in my opinion, and in my experience. So if you're struggling, I think the best thing you can do is focus on one strategy and dial that in, get as close to 1,000 reps as possible, even more, and then you can truly master something before you move on to something else. In the 48 Laws of Power by Robert Greene, it is law 23 that says that if you've got a fat cow that provides you milk for a long time, then stick with that one cow. I agree with that in relation to trading. If you've got one strategy that makes you money and you can extract money consistently using that one particular strategy, why should you bother wasting energy elsewhere and muddying the waters a little bit? So yeah, having multiple different approaches on the charts ended up being a little bit detrimental for me. Number 5 is lacking discipline. So like I said earlier, you can change those other 4 pretty easily by deleting stuff off your watch list, by just saying I'm going to have a cutoff point tomorrow with my trading, by not taking other people's trades, and by just focusing on one pattern. That's a really simple decision that you can make, but lacking discipline, it's really difficult to get over that hurdle. I lacked a lot of discipline for too many years. About 7 years out of my nearly 10 years of trading, I lacked discipline. I thought, like many others, all I had to do was find that holy grail in technical analysis, that one particular type of level that bounced price every time it got touched, and I would become a profitable, consistent trader. That wasn't the case. The discipline and the consistency comes from your own life habits as well. What you do in your day-to-day life is going to be reflected in the charts. So for example, if you say that you're going to cut out sugar or you're not going to have a dessert, and then you end up doing the complete opposite in that and having a little bit of ice cream after your dinner, that's not discipline, that's a bad habit. So when you get to the chart and you say, right, I'm not going to take this trade because it's not right, but your natural state of mind is to not do what you say, you're going to take that trade and you're going to lose, and then you're going to feel really shitty about it. So it's about setting habits and behaviors in your day-to-day life so that you can come to the chart as a disciplined person with good habits and take the right trades only. Like I said, this one's a little bit more of a difficult thing to start doing, but it all starts with consciously understanding that you aren't the disciplined person that you think you are. And that's probably difficult to hear, but the way you can realize this is by journaling your emotions each day. Also, journaling your trades and going back and looking through them at what you're doing so you can see your bad habits. I know you're journaling your trades, aren't you? Of course you are. Of course you've got all of those bad trades on your trade journal, but you need to shine a light onto those particular bad habits that you carry in order to get past them. But again, I think this just all comes down to your day-to-day habits. So if you tell yourself you're going to go do some exercise 5 days a week, Monday to Friday, and by Wednesday you haven't done a single day of exercise, then you're not really a disciplined person. And to be a profitable trader, and a consistently profitable trader, you need to be disciplined. One of the hardest things with trading is that you can be really motivated to make money. You could get this wave of energy come up in you to say that you're going to go to the markets and you're going to make a load of money today and you're going to follow your process and follow your system, but you're not in control of anything. You're only in control of whether you enter the market or not. You're not even in control of where you get out of the market. So motivation is just pointless. A lot of people, particularly online entrepreneurs today, will talk about how discipline trumps motivation, and it's extremely true with trading because of those reasons that you're not in control of anything but your entry. So in order to improve your discipline, what I've found is kind of links to the other points, having a set amount of hours to trade in only and having a strict cutoff point and sticking to that, reducing the amount of charts that I watch, and only trading one particular strategy. It's really difficult to kind of submit to that, but when you get enough reps of doing it, and that's just even the first back-to-back days of falling into a new routine. So let's say, for example, tomorrow you say, right, I'm only going to trade one pair and I'm only going to trade one continuation pattern. And if it appears, great. If it doesn't, it doesn't. There's a certain amount of strength that you will gain from walking away at a cutoff point, and it will improve your self-belief, which will stop you taking other people's trades, but it will make you start trusting a process that you're putting together so that you're able to then build from that and build that momentum up. And all it takes is those first few days for you to think that you've actually got something that you can stick to. So yeah, I lacked discipline for a long time, and it's something that you cannot get from the charts. You have to get it from your day-to-day life. Once you make certain decisions about what your daily routine will look like, such as meditating, journaling, going for a walk, back testing even, once you start adding those to your routine and you're doing them day by day, not only will you get the benefits from the mindfulness practices, but you'll also get the benefits of consistency and momentum and the discipline from just naturally having that itch in the back of your brain that comes when you haven't done something that you know you should do. You'll naturally then build a little bit more of a resilient mindset to take to the charts, where the things you know you shouldn't do, you don't do, and the things you know you should do, you do. Okay, so that's it.